I'm Sarah Williamson, and this is Going Long with FCLT Global. On this show, you'll learn what it means to be long-term from the top minds in global business and investing. Leaders from companies and investment organizations join us to discuss how they are leading their teams for the long run on issues including capital allocation, risk management, climate change, and sustainability. To learn more, visit our website at fcltglobal.org.
Thank you for joining us for today's episode of Going Long, the FCLT Global podcast. Today, our guest is Amy O'Brien. Amy is the Global Head of Responsible Investing for Nuveen. Amy leads her team in creating a holistic responsible investing vision, strategy, and unified framework across Nuveen and TIAA. Amy is a member of the Nuveen Executive Leadership Team and Global Investment Committee. In 2018, Amy was identified by Barron's as one of the most influential people in ESG investing and was named ESG Investment Manager of the Year in 2021 by Women in Asset Management. And we're proud to say that Nuveen is a member of FCLT Global. So, Amy, thank you very much for joining me today.
Sarah, it's my pleasure to be with you.
Right. So let's start with the basics. You have the term ESG, sometimes responsible, others. The term ESG means different things to different people these days. What terms do you use? How do you use them? What terms are helpful? Are some terms, have they become flashpoints? What words should we be using here? Let's start with that.
Listen, all of the above, and often these conversations start rightly so with the terms, because the terms do mean different things to different stakeholders. Not to be evasive, Sarah, but ESG simply stands for environmental, social, and governance. And what matters more, in my opinion, is the word that comes after you use the acronym ESG. So do we mean ESG factors? Do we mean ESG analysis? Do we mean ESG commitments? Do we mean ESG outcomes or impacts? So I think, first and foremost, let's make sure we understand the context of how that acronym is being used, and perhaps it is a little overused. But in my experience, it really comes down to two kinds of ESG. One is considering ESG factors in the investment process. That's relevant to, here at Nuveen and TIA, something that we do across all asset classes. In addition, so that's sort of what we're doing across the board, after decades of work on this. And the second use really comes to, is there a very specific ESG outcome or impact associated with a portfolio? In that second case, it really is often when a client has come to us to say, we want a specific investment objective alongside, these intentional outcomes. And so I think roughly that's how the ESG landscape is beginning to be understood globally. We still at Nuveen and TIA really prefer the term responsible investing. And we've kind of stuck to that for many decades because we do believe it encompasses just this broader set of tools that are really important to long-term investors. And so while a lot of focus has been on, ESG analysis and investing in recent years, the whole concept of engagement and stewardship would fall under that broader RI umbrella, as would a firm's commitment to transparency, working across the market to sort of sort out the ESG ecosystem. So that's sort of, our preference is to use that broader term. I know some of the other terms are more popular with certain kinds of clients, but that's why RI, or responsible investing, sort of continues to be in my title at least.
That's really helpful, and I think that distinction that you made between looking at ESG factors and looking at trying to create a particular outcome is extremely helpful. And when you think about the factors, you said you do that across, so that would be thinking about risks, opportunities, long-term investing, all of the things that most of us who've been in the investment world for a long time just consider good investing. That's one side, and then the outcomes you really think are client directed, client objective. Somebody cares about a particular issue. Is that right? Is that a
I
fair
think
summary?
generally, without getting too wonky, right, on all the specifics, I think generally that is the case. So, for example, and the factors in our case, at Nuveen and TIA, we invest in a lot of different asset classes. And so, we have to work on, on a range of, real estate and public equity and fixed income and farmland. And so the analysis piece takes a lot of different forms. But, an example would be of the client directed objectives would be something like the net zero carbon commitment that we see many investors making around the globe, and including our parent, TIAA, with its $300 billion general account. And so in that case, they're not looking for concessionary returns. There's usually some investment beliefs that have been developed with the client, or in our case, our parent, that helps guide, how that portfolio might change over time. So we are in the end, investors. A lot of the frameworks and the outcomes, there's a healthy debate and partnerships around the world now with different coalitions focused on some of those outcomes. But typically there is a Venn diagram here, right, of the overlap of the factors, and the actual, ESG objective of the portfolio.
Okay, that's very helpful. And then to your point, the responsible investing is thinking about being a long-term steward, engaged. Maybe you could just spend 1 minute talking about, you said this is built on many years of history. I know a little bit of the TIA history as a manager, mostly for university professors and people like that. Is that right? Or tell me a little bit of the history, to put this in a little bit of the context for us.
Well, TIA was founded over 100 years ago with a particular focus on, creating secure retirements for those in higher education, the nonprofit community, sort of that 403B market. Since that time, though, there's been a lot of change and evolution, and TIA has built out Nuveen as this asset manager arm of our parent. So our parent is, TIA.org at its core, a nonprofit, but Nuveen is the for-profit asset manager. We do, of course, manage all of the parents' assets, the general account, many of the retirement funds that are on options on plan menus across the country, at colleges and universities. But Nuveen has a really growing third-party business, and many of our third-party business is in the alternative space. It's with investors in Europe. And so, between the legacy focus on, professors and academics who really cared about ESG issues long before it became cool, and then the growing client base that we have in the third-party asset gathering outside the US, particularly in Europe and Australia and APAC, that's really put us in kind of a unique position to see, how the global landscape is evolving. And let's face it, in some of these other markets, they're a bit farther along than investors in the US. And so, that is just the reality sort of why, our focus is what it is. But our parent, TIA, is known for a very long history in proxy voting and engaging with companies for decades. I mean, the first in the United States, we should be proud that, the first social issue shareholder proposals were actually, filed back in the early 1970s. And my team now staffs a board committee that helps guides our work in this area, including voting, that has existed since that time. So there's a long history of using our influence in the market. I personally have a background in this, and it's interesting to see, the evolution of the shareholder proposals over the past 20 years. Because I've been in the field about over 25 now, and just to see the uptake, over time of the kinds of business cases that we were making on the proxy. So, that's another reason why there's wider adoption for sure. But, we were always, as long-term investors, very focused on being partners with companies, not shunning companies with challenges. And what's been gratifying to see over all these years is a lot of companies coming to investors like us to help, for help. And, we kind of joke sometimes that we're, the whole RI community is, a lot of free consulting for companies, but the reality is a lot of companies are looking to do the right thing here. And they themselves are trying to think longer term, like their investor base.
Yeah, well, you do have the, as you said, you were there before it was cool. So I think that long-term perspective helps. And it's interesting what you say about companies really wanting to engage and wanting to try to get that free advice. As you said, sometimes we in the popular press see it feels like company versus investor, but and maybe it's at some points it is when there's a public proxy fight or something like that. But can you talk a little bit more about, how you engage, what the levers are that you try to pull on to drive real change? What is that? Give us a little, look behind the scenes at that. What is a big investor like yourselves who has that long-term outlook? Talk about with a company that's trying to figure out how to guide their board or find their way on these issues.
Right, right. Well, I mean, a couple of our things that I want to point out here is we've certainly evolved our approach over time. So even though we've been in this space for a long time, the current head of stewardship on my team, Peter Reale, and his team has just done a fantastic job over the past couple of years, looking at sort of the emerging expectations around stewardship and engaging and voting, building out and sort of future proofing our policy on a lot of issues, our philosophy behind how we're going to vote, the research process that we go through to determine, what companies to engage with on a more focused way, honing in on a handful of issues rather than trying to tackle multiple issues in a light way, if you will. So it's a very collaborative process. Also with our investment colleagues, we can't, and most of these conversations are around making the business case for companies to focus on a particular ESG issue. And having very open dialogue with them, very case specific, open dialogue around challenges or opportunities that we see in the portfolio. And so, sort of a culmination of sort of where we landed on all this was last year when we issued our first annual stewardship report that will be coming out, every year on an annual basis. So look for that in a couple of months. But that really gets to a new way of defining what is an engagement. Is an engagement just a phone call with a company, right? I mean, are we organizing around an issue of transparency? Are we asking for a new kind of policy or a particular outcome? So I guess that, that's a long way of saying, the program is very much, case by case, grounded in our belief that companies, our portfolio companies addressing, these key ESG material themes within their core business strategy is better for, risk management, identifying, new opportunities, including new customer bases, and really thinking, longer term. I mean, I think, just being in the field so long, it has been a bit gratifying to see companies over time thinking longer term. I think there's still enormous pressure on public companies with the quarterly earnings, but let's face it, some of these environmental and social topics really required that long-term thinking. And that's why we've seen the most success, when material ESG issues are built into the company's strategy. So absolutely do companies come to us? Certainly, there's certain times of the year leading up to the annual meeting and voting. There's, especially if there's a shareholder proposals on the ballot, a company, and we typically, will of course talk to the company about their view on a shareholder proposal. We'll also talk to proponents. We'll do our own research, and we'll really, make a decision around voting. And so starting last year, we started to release, I think, an unprecedented level of transparency for the industry and issue vote rationales for how we voted on every single shareholder proposal in the S&P 500. And this coming year, we'll also be releasing more information on our director voting. And, I hope that gets to the nuances and for those who are interested in understanding why we would cast a vote for a proposal, perhaps at one company, but against the same proposal at a different target company. And that sometimes can be confusing. And I think we're going to see a lot of focus on voting, of course, this year, and big institutional investor votes. But gets back to the point that, if we feel like the company is doing enough in a certain area, they might not be the best target for that particular proposal. So really requires that case by case, close relationship with the company, and what I believe is some really unprecedented transparency on our part around our stewardship activities.
That's really helpful. So it's certainly not a one size fits all approach, or it's not an algorithm that's doing all of this for you. That one of the pieces of work that we have been pushing on, you said, obviously the pressure on public companies is this idea of having a long-term strategy, like you mentioned, and sharing that strategy. And some companies, as you know, have had perhaps a long-term strategy, and then they have a sustainability strategy, and they're different from each other, and that doesn't work. Are you seeing broad acceptance of the idea that companies need to have a long-term strategy? They need to have a long-term strategy that makes sense for their business and for the sort of future-proofing, evolving world, and they're getting there, or that it's hard, or is there pushback on that when you say, no, I want to understand your long-term strategy, I want to understand how these issues fit into that? Is that a conversation that is a general rule people embrace and make sense?
Well, I mean, listen, companies are varied on this front. I certainly have seen, in my career, the shift from a sustainability being, this might be harsh, but, kind of a sideshow, right, to moving into the strategy, to the core business strategy, to moving into the boardroom. Right. I mean, what have we seen over the past couple of years is a focus on how E&S topics kind of link up to G topics, right? How are these issues governed? And so, I mean, I like to see that kind of crossover happening, both within management and, at the board level. So, I mean, you just think about the kinds, the other drivers that might be there. I mean, some of the change that we've seen in the past couple of years, big public companies taking stands on issues, during incredibly unprecedented times, really digging in on S issues and the pandemic, and even now, even with what's going on, with the war in Ukraine, I don't see a lot of rollback of, climate commitments. Frankly, I think a lot of businesses are understanding that, yeah, it makes a lot of sense over the long term to decarbonize and develop energy security approaches, and sort of the business case is coalescing. So the larger companies have certainly had more resources to put into this. But I'm seeing a lot of interesting things happening in the private markets on this front too. I mean, there's, just this energy around, new companies being created to really tackle, some of the biggest challenges, of the day. And these smaller private companies will eventually be public companies, and perhaps or strategic, partners with public companies. So I think, it's getting there. I think it is challenging for certain sectors, for sure. But I think the wild card in all of this has been the employees themselves, as well as consumers. I mean, I think, I think the consumers now have an unprecedented amount of information around the companies that they're shopping from. There's this conscious consumerism movement. And it's not just about among high net worth. I mean, there's a lot of people very much more conscious of their imprint, on the world. And then employees is where, there's been a lot of interesting action over the past couple of years with, making shifts in the way, we return to office and work-life balance, and all these issues that we were kind of working on 20 years ago, but weren't getting, as much traction. But now they're become front and center talent management issues, right, on S. And so that's been very gratifying to see that. Are we done? No. Do we need to continue, in some pockets to create more demand for investing this way? Absolutely. I think one of the issues is this has been still a pretty institutional world. And I'd certainly like to see more democratization of, ESG and sustainable finance, in the years to come.
So you raised a bunch of really interesting issues there. One is, let's go back to the boardroom. You mentioned that. So, a few years ago, probably some of these issues, might come up if somebody really had a ESG controversy, as we like to call them, which usually means somebody's made a really big mistake. But otherwise, wasn't really so much there. Now, I think boards are asking their management teams, they're asking each other, how do we anticipate and navigate some of these issues? Obviously, some people are making commitments, other people are not. Some people are getting pushback, others are not. There's a lot of politicization, particularly in the U.S. and particularly in certain states. Do you have any advice for a board that is trying to navigate these, choppy waters? As you said, the G is really what at the end of the day drives the E and the S. What are the characteristics that you look for to see that the governance is strong and a board has some sense of what they're doing on these topics that maybe they may not have learned them in school. Let's put it that way.
Yeah, that's for sure. I mean, I think one of the things we've done is, for TIA has long been known, and Nuveen, for focusing on, board independence, board structure, diversity on boards, which meant a wide range of diverse characteristics of the board members, and the importance of refreshment of the board. So I think a lot of the classic G issues are actually part of the solution here. Because if you don't have, sufficient turnover on a board, you're not going to have new voices. And so we've seen a lot of focus, with even some of our own work, around women on boards, in not just the large companies, public companies in the U.S., but of focusing on small and mid-sized companies that did have more of a problem. Let's face it, in terms of gender diversity. And we put that same focus in some of our big markets outside the U.S., such as Japan. So I think that whole sort of movement has been reaping benefits on this topic. Not to say that every woman who's added to a board happens to be a sustainability expert, but it's that openness to different perspectives that sort of has to be there. And then secondly, I can just say in our own case, we do a lot of work with our boards to provide them access to education on these topics. I mean, every board, usually if you're on a big company board, like or private board, like our company, or a public board, there's a lot of the continuing ed type activity that I see that's either, helping some of the board members that may have not had this background get up to speed. I know some members of my own board committee who are, taking classes that are now offered, through various industry associations. And then oftentimes, our board members want this, I work with them to bring in outside speakers who can really, on a topic that, perhaps we haven't focused on yet. So I do see more of that happening. I see more, openness at the board level. Again, you have to have some of these like structural governance issues and best practices in place. So, but I've seen a lot of that. And that's where you see now, more focus on vote no campaigns, on directors, that some of the advocacy groups and others, and we have, provisions for when we are voting against directors. So sometimes it gets down to that lack of, expertise or independence. So that's definitely going to be an interesting place to watch. I think that's just, it really has a strong component to, diversity on boards as well.
Yeah, that's really helpful. And then how do you must get pushback from a lot of different places, right? So you are kind of at the intersection or the nexus of, portfolio managers who may know the company very well from a financial point of view. Perhaps the governance, who's doing well there. You may get pushback from your members who care about a particular topic, and then these advocacy groups who may be filing, proxies with, 1,000 companies. So how do you've got this sort of multi-stakeholder environment, if you will. How do you think about sorting out the various priorities that people have, and I don't know if there's an example that you can share of when they come into conflict and how you can solve those.
Yeah, we just have to be very clear about our own strategy and be open certainly to dialogue. I've it's been quite an interesting year, Sarah, with I mean, rightly so. I mean, there's a lot of scrutiny on our industry. A lot of stakeholders, are realizing this is a continued growth area. A lot of skeptics, sort of on both sides. Like that there's a group right of stakeholders who definitely think finance is overstepping its role in this, and then we have on the other side those who are looking for us to play a greater role in driving ESG, positive ESG change, and all the criticisms there around greenwash. So all we can do, I think we can lead through collaboration, we can lead through transparency, and just be very open about why are we doing this? We are investors. We are constantly looking for the business case for taking action. We're looking to manage risk. That's why hence the focus on climate, for the past 10 years here or plus. And we're looking for opportunities too. And I think if you don't have a lens, an ESG lens on your investment process and philosophy, you might not be open to looking for new types of investment opportunities. So I think that, and lastly, it's there's rising demand. I mentioned at the top of our conversation for investors who want to have portfolios that are associated with very specific E, S, or G outcomes. And so, getting back to we need real precision with how we talk about our work. What are we doing across the board that's good for, any investor? And then, launching investment strategies and options and portfolios that, our clients can select into. So I think we're going to have that side by side for the foreseeable future, certainly for as long as I'm going to be in this field, where you've got what does everybody get? Every investor, regardless of their opinion about ESG topics, as long as we can really show that those factors are adding value to the portfolio, and that's good for everybody. And then we will have very explicit outcomes associated. So we've launched more and more in the low carbon space, the trend, low carbon transition. We're looking into more what's possible with the S and ESG under an inclusive growth type of a framework. And again, more investors have those objectives for their portfolios. So just gets back to being very precise about what are we doing for everybody? What are we doing for the funds that are sort of branded, ESG leaders or impact? And then lastly, just trying to play a constructive role in how this ecosystem is coming together. I mean, we did not start with a big top-down global plan here, right? I mean, some of us have been, part of coalitions that formed 20, 30 years ago. ES, it was kind of separate from G. They kind of came together. I mean, it's just an amazing kind of family tree here of how do we get here. But we're trying to play, Nuveen is trying to play globally a constructive role in bringing the pieces together and getting that ESG, I would say, information ecosystem right, so that we can provide investors with confidence around these strategies.
Right. So one thing you mentioned I wanted to come back to was the net zero commitment. So can you describe a little bit more about the net zero commitment Nuveen or TIA has made, and how do you think about, getting from here to there?
Yeah. Yeah, I mean, that certainly has been a term, another acronym that's gotten a lot of attention, certainly this past year. And at the moment, and this is all described in our climate report, there are different versions of that commitment. So we worked with our parent, with our board, on setting the net zero commitment for the TIA general account. So this is the insurance company part of TIA, the assets that back the guaranteed annuity of our parent. So the TIA traditional, and that was really a developing investment beliefs that climate risk is investment risk. and pledging through a pretty long process working with the boards to set up the net zero by 2050. And we're already, making, I think, meaningful progress in our next climate report. We'll show some of that with interim targets. But really, again, it reflects our long-term, investment horizon with a lot of our assets. I mean, that account, interestingly, is mostly fixed income, public and private, and alternative assets, right? Real estate, farmland, timber, and certainly by having that strong tilt to alternatives, we were seeing the effects of climate change, physical risk on some of these assets. And so we sort of had been certainly looking at that. And then as the global policy environment is coming, together, not all there yet, the transition risk piece was becoming really evident. So it is not, was not positioned as a divestment or boycott, type of a commitment. And it was really a total portfolio commitment. So we didn't commit to net zero just for the energy sector, right? It was the entire portfolio, all sectors. And the interesting thing, Sarah, is, it's required a lot of engagement, across the company to set that goal, to set up the internal governance around that goal, to work with our enterprise risk management group to build out the analytics. And so I'd say like the process of setting that target really brought the company together in a very different way on a very high profile ESG topic. But we're going to use a variety of strategies. I mean, we're looking at developing net zero pathways by asset class. We're looking at, we've got to build some new tools here to understand, what is the footprint of the portfolio as, fixed income assets roll off. How can we reinvest in ways that, are focusing on companies who we do believe, have a credible, net zero commitment of their own in place, right? So it's really requiring, I would say, a refinement of the toolkit, working across multiple asset classes, and really, committing to building out the analytics that we need. We're not there yet. As I mentioned, the sort of ESG information ecosystem. We need to work with partners to understand, scenario analysis over time. So it's been a big commitment. A lot of people, frankly, new roles at the company have been created to help implement that. So that will continue to be a huge priority for us, going forward. But it's not just, it wasn't just a simple decision based on sort of the issue du jour. It really was grounded in, climate risk is investment risk. And this is how we protect the portfolio for, our beneficiaries who are with us for decades, as our retirement clients in particular.
So clearly the net zero commitment is a long-term commitment, and it's driving all sorts of change within the organization that I would expect will last for quite some time. How do you see other issues changing or evolving over time? In other words, if we were having this conversation in 5 to 10 years, do you think we'll still be talking about net zero? Do you think we will have cracked the code by then? Will there be other issues? What do you see on the long-term horizon?
Yeah. Well, I do think the climate topic will be with us for a long time. And I think what's going to flip is the focus on investing in climate solutions. So I think there's been a lot of focus on the decarbonization part, but we're excited to work on a couple projects that will, I think, help move the industry along. And really, the next question is, if we get out of certain types of investments, like, what should we put? Where should that capital flow, right? So I think that's going to be the interesting part of the climate conversation going forward. I mentioned a few minutes ago about the S in ESG. I do think that is going to be more of a focus going forward. In that case, we don't have like one metric around which, and so you wonder, like, oh, can there be a net zero for a social issue, right? It's kind of hard for me to see the industry organizing that way. So I see probably a little bit more of a differentiated strategy on that, but there is so much need out there, that needs to be financed. I mean, both in the US and abroad, emerging markets. But, I think, again, like I see investors sort of organizing around that topic, having conversations. around what does it mean to make an S commitment. Interestingly, I see a lot of the S conversations at large organizations about their own, social performance. I mean, a lot of it's about their own associates or employees or their own diversity. So that's kind of taking a much more internal focus, right, versus a portfolio focus. But I think we're going to have more choice. I think all of what we're hearing from regulators is going to lead to over the next couple of years, hopefully, a sorting out and more credibility and confidence in the field. And then lastly, I think we're going to be focused a lot on taking clients on the journey. We talk about that a lot at Nuveen, about taking clients on the RI journey. I think some of us, who have been in the field for a long time think, well, we're on the same page here. And we're not. And I just know just from conversations, very encouraging conversations with clients, there's just this sort of new crop of trustee and decision maker that is ready to have a constructive conversation. I mean, the kind of conversations that I was having 25 years ago about the trade-off, like some of that is just not there. So I think we're just going to be working on, not just specific what's the new issue, but really engaging, a lot of new stakeholders who are going to create more demand for what we all care about here.
Well, that's great. I think that having that long-term perspective from obviously your history, but also the long-term perspective into the future of, this next generation of trustees and young people who are responsible for these assets that hopefully will be supporting them or their children, whoever it may be, 100 years from now. It really does put it in that long-term perspective. So thank you very much for your leadership in this space. You clearly are driving the thinking on this, and Nuveen and TIA are pushing this in a very thoughtful and investment heavy way. And we appreciate your insight into these topics. Thank you for your time today.
Thanks, Sarah. It's been a pleasure.
Thanks for listening to today's episode of Going Long with FCLT Global. Be sure to hit subscribe to get new episodes every other Monday. To learn more, visit our website at fcltglobal.org.